In today's video, we're going to do a deeper dive into Microsoft, specifically creating a game plan to trade the day after earnings. Microsoft is one of the many stocks that reported today after the close. It beat earnings. Analyst estimates were $2.27 per share. Actual earnings, $2.32 per share. So that's how we come down to the conclusion that earnings was a beat. And as of right now, Microsoft is shaping up to open around $10 above where it closed today. Current price after hours, $2.52. Our close for today's candle was $2.42, so about a $10 gap there. Now we can use those two pieces of information, the fact that we're likely to gap up and that we have an earnings beat, to take this analysis into Microsoft a little bit further. Now for that, we're going to be using our Smarter Earnings Indicator. You can download that for free on our website, tosindicators.com/earnings. There you can not only watch this guide, it's around an hour long and walks through lots of different examples around using these earnings tools, but you can also download them yourself to test this out for any one of the other markets that reported today. You're looking for the Smarter Earnings Indicator. This is the one useful for trading the actual day of earnings. There's two setups we're looking at. One is a gap fill. Exactly as the name implies, we gap, in this case, up, and we fill that gap on the bearish side, versus we gap and go, which means Microsoft continues to stay where we're currently trading at, which is looking like a gap up, and instead, we continue having a move in the bullish direction. So those are the two setups we're going to be looking at. The goal here with the Smarter Earnings Indicator is to create a good game plan that we have ready to go based off of what we think is likely to happen tomorrow, and use that information to trade, or day trade I should say, the actual day after earnings inside of Microsoft. Now let's start by first loading in the Smarter Earnings Indicator. Double click, apply, okay, and that will then give us our labels up here on the chart along with the chart bubbles. Now I'm going back 5 years for this analysis, but in case you'd like to expand that, simply head over to the time frame and you can expand that to 10, 15, 20, whatever you'd like. Now for the past 5 years, we're using 21 total earnings, and the reason that's 21 instead of 20 is because it's counting this earnings as well, our earnings today. So subtract 1, that's the actual data we have available to us, so that gives us the total of 20 earnings over the past 5 years. I'll go through these labels from left to right, and we'll discuss each one in a little bit more detail. Our first label is our greater than expected move. Here we can see Microsoft has a greater than expected move only about 9.5% of the time. Our expected move for our current earnings cycle was $12.33. As of right now, we're well within that expected move. We're about $10 away from our current closing price. So that's within this $12.33. Likely that we're going to be in the 91% of the time here, in which we have a less than expected move, total move there. So we can skip this label and move on to our next set of labels here, which discusses gap fills. Now that we know Microsoft again is likely to gap up, we can focus on the gap up fills. There we see we had a total of 6 gap ups that were filled, and only one of them was on an earnings miss. And we can see examples of that through this chart bubble here. You can go back and study them in case you're curious to study that particular price action. Now that we know that only one of these 6 were on earnings misses, we can also derive that 5 out of our 6 gap fills here occurred with earnings beats on its favor. So that's something that fits our current scenario here. We have a beat inside of earnings. So far it's looking like we'll gap up. Let's call it 252. So let me draw a price level there, 252, right? And so that allows us to see this a little bit more visually on our charts as well. Let's make this a little wider, and I'll give this, say, the color of red. So this is where we're likely to gap up. If we do get that gap fill, that would be price action in Microsoft coming back down and touching at least a high of today's candle, which is 243.95. So that's scenario number 1 if we get this gap up fill. Now we move on to our next set of labels, which are the gap and goes. We're focused on the bullish scenario here since it's looking like we'll gap up. And out of our 6 times that we've had a gap and go, all 6 of those times occurred on earnings beats. So that too fits the scenario we're looking at. We had an earnings beat, we're gapping up. It's likely that we may continue trending in the direction of the gap. So let's continue studying that a little bit further. We can see there the average bullish move $3.57, and the lowest move, this is the min number out of all the different gap and goes we've had, is $0. That's a scenario in which we just reversed. We didn't really make a move in any direction there. So we're more curious to use this $3.57 number and try and see, is there any confluence here where if, say, Microsoft does open up at this level 252, what is above us near that 357 mark? Now for that, I'm going to switch to a weekly time frame chart here, and I thought this confluence was a little interesting. I'll load in our market pulse indicator. So this is nothing more than a 10-period variable moving average, and if we take a look at this scenario here, if Microsoft does open up near that 252 mark, and say we do have this gap and go scenario that's occurring, we project 357 from that gap and go, that gives us a tag of this market pulse line, which to me seems like the more likely scenario compared to coming back down and filling a nearly $10 gap inside of Microsoft. So that's why I'm more in the scenario of the gap and go on the bullish side compared to a gap fill. Another reason why I think that's likely, if we load in the edge signals indicator here, this is our overbought, oversold confirmation, we can see in this bear trend here, every single time that we've had a bullish signal, we've gone and we've tagged the market pulse line. That's occurrence 1. Here again, we tagged the market pulse line. Now we're getting 2 more edge signals one more time. If I zoom in, we have yet to tag the market pulse line. Earnings could be that catalyst which takes us there. We're already gapping up near that 252 mark. A move of 357 would be a small tag really of the market pulse line. If we overshot that, that would take us to the upper end of this longer term bear trending channel. And to me, that seems a little more likely compared to a gap fill, which is nearly a $10 gap inside of Microsoft. That being said though, probabilities here suggest that this is almost as equally likely, 5 out of 6 scenarios here compared to 6 out of 6 here, where both are equally likely, but the confluences with the gap and go are the ones that stand out to me a little bit more. I hope you found this video useful to understand how to trade the day of earnings after we have earnings data released. In this video, we focused only on Microsoft, but you can apply the same exact principles we talked about for any one of the other markets that are either reporting earnings today after the close, before the market opens tomorrow, or at any point during this earnings season. Take care, everyone. Good luck trading, and I'll see you in the next update.